Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. And on today's show, we welcome Ian Ball, who is the president and CEO of Abitibi Royalties. Welcome to the show, Ian.
Thank you for having us.
Let's begin by talking about your early career. You previously worked for and with Rob McEwen, who has been very successful within the gold mining space as a company leader and investor. So what did you learn from him in terms of running and operating a mining company, as well as how to speculate successfully as an investor?
Well, just to start with the first part of that question, in terms of what I had learned from Rob, I had worked with him for approximately 10 years, first at Goldcorp and then subsequently at McEwen Mining. And there was really two key takeaways that I could probably leave your audience with. And the first is really this willingness to question the fundamental assumptions that drive the underlying business. And there's certainly a lot of them in mining, and we don't really ask ourselves why we're doing it that way. And I felt that Rob would ask those questions and look for an alternative. And a lot of the times the alternative was much better than what we were currently doing. And as an operational employee working on the operations side, sometimes the ideas would sound a little in left field, partially because you didn't think of it, but you would go home at night and you would come back the next day, and I would say majority of the time you would be in agreement with what Rob was saying, and that the alternative was outside of your comfort zone, but it was a better way of looking at the problem. So that would be the first thing I would stress, is this unrelenting ability to question the fundamental assumptions within the mining sector. And the second thing I took away from Rob is having this laser type focus. And, when we were at Goldcorp, we had two mines, but the Red Lake mine was the key driver and represented the majority of the production and the cash flow. And it was just having one focus, how can we improve it? How can we make it more efficient? How can we find more gold? And it was just this relentless ability to keep focusing on the problem. I think that made that company and Rob so successful. So I'd like to take those traits and apply them to Abitibi. And, I think we've done an okay job at it, but we obviously have room to improve if we hope to scale the heights that Goldcorp had done.
Let's get your current thoughts on the gold environment today. The gold price has now started to move, but most investors are still waiting for a replay of early 2016, where speculation returned and money was made for at least the first half of that year within the junior miners. I know your company has recently reached an all-time high, but talk to us about the valuations you see within the junior mining space today. Some juniors have still yet to move.
Well, I think there's been a big shift in the junior mining sector, and I say that because it's becoming more difficult to create value within the mining or the junior mining sector in particular versus 10 years ago, 20 years ago, going back to the 80s. And I say that because it's the deposits are generally becoming lower grade, so that raises the capital that's needed to put them into production. That lowers the rates of return. Permits are harder to get and much longer to get. So all of this is making, I think, the junior mining sector generally less attractive. But you are seeing those pockets of companies that have high grade discoveries that don't require a lot of capital, and perhaps a permit is already pre-existing. But I think the junior mining sector is experiencing a lot of headwind, even with the increase in gold price.
Well, let's move on and talk about the current environment for royalty deals, and how are you trying to gain value from new royalty transactions within the mining industry? Has the way you've structured deals within the royalty space changed over the last few years? I imagine you need to become more creative to really capture the value going forward.
Well, I think a lot of it is, we always feel that you don't have to do a deal. So if you feel the valuations are not attractive, there's nothing forcing us to go out there and buy something. One of the big key drivers for our company has been buying back our own shares. And so we always, when we look at buying a new royalty versus buying back our own shares, there's a quantitative process that we go through and say, well, what is more attractive based on a risk return outcome? And so you are right that as the gold price has gone up, the amount of royalties for sale tends to drop from new issuers. So companies looking to raise money, I find, is those royalties are going down because people are looking to equity finance versus sell a royalty. What you might see, however, are portfolio of pre-existing royalties coming for sale. It's like when the gold price goes up, you see a large amount of supply coming from scrap. There's a lot of royalties that are hidden within the majors that haven't seen the light of day. And with the higher gold price, I wouldn't be surprised if pre-existing royalty sales go up, but new royalty sales go down.
So in your mind as an investor, Ian, has this bear market for gold in general ended? And because of such a long bear phase, are we now setting up for a much more sustained, continuous move in gold going forward? And as a CEO, what lessons have you learned during this period?
Well, I would say, it's always tough to know when a bear and a bull market starts and stops. Obviously when gold hit about 1,050 a number of years ago and then rebounded from that price level, you could, from a pure quantitative standpoint, that's when the bear market ended. Since then, we basically have been trading sideways for the past few years. Although I'm not a huge fan of charts and technical analysis, when gold broke through the $1,300 and $1,400 price barriers, those were pretty significant, especially the $1,400, as previously that had been had acted as resistance. I wouldn't be surprised if the gold price was to decline from the current levels to touch $1,400 again. I think that would be quite healthy for the gold price. But when you look at, what's going to be the driver going forward, I think, things like the U.S.-China trade dispute, Brexit, the protests in Hong Kong, I would think that in 1 year, 2 years' time, we won't even really factor that into the gold price. I think what's the key part, and what investors should be looking at, is the monetary policy, particularly coming out of the Federal Reserve, and saying what is the printing of money going to be? What is the interest rates going to be? I think that is the largest driver for a sustainable run in the gold price. And I don't particularly think we're in a bull market similar to 2002 to 2012. But I think the environment that we're finding ourselves in right now is much healthier than what we were experiencing over the past 5 years. Just touch upon your last question, which was, having gone through a downturn in the sector, what lessons would I take away? I think the key is, especially if you're a junior mining company, and obviously this doesn't apply to all companies because it's easier said than done, but it's have the ability to generate cash, because if you have to finance in a down market and your share price is suppressed, issuing a large amount of stock is basically going to limit your ability to generate capital gains going forward. So basically be able to ride out the downturns in the sector without having to issue equity, I believe, is the number one lesson that I would think that junior mining companies should be looking at.
Okay, let's move on and talk about any books or authors that have helped you within the course of your career to date, Ian, either as a CEO or as an investor. Can you share some recommendations with us?
I would say probably the best business book there's two. So I would say there's a book and there's a video I've watched. So the best book I've ever read, it's called The Essays of Warren Buffett. And what it essentially is takes the Warren Buffett annual letter to shareholders and then breaks it up into chapters. So capital allocation, share buybacks, dividends, acquisitions, corporate governance. And so it basically distills 50 years of information into one book. And it's very well organized. And I would say that you read that book over the course of a weekend, and it would be better than taking an MBA program by a factor, by multiples. I think it's the most definitive book I've ever read on business and investing. So I would recommend that book to anybody. You can buy it on Amazon. And there's actually a very good YouTube video as well. It's a little bit blurry, but it's of Steve Jobs when he took the helm of Apple for the second time and talking about how they were reconfiguring the company. And it's very good from a marketing standpoint. This is when he introduced the campaign Think Differently, or Think Different, and how they were cutting the Newton from their product line. And again, it's 20 to 30 minutes long, But anyone who's looking for insight into marketing and products, I thought it was an excellent video.
Excellent. Okay, as we begin to wrap up, Ian, is there anything else you wish to talk about today? Anything else on your mind?
Yeah, I think, and one of the big, when I was more working on in operations versus the royalties, one of the biggest things I always thought was going to be a key driver for the mining sector is moving from the diesel haul trucks to the electric haul trucks. And I was just recently, I had been down to the Caterpillar factory. I had spoken to them. Caterpillar was making no progress on introducing an electric haul truck. But when I was at McEwen Mining, we had run some studies, and it had shown that electric versus diesel could cut your mining cost in half for open pit mines. And there's recently been a new electric haul truck that actually recharges itself as it declines into the pit, because obviously you produce a lot of energy as you go down into the pit. And so I think investors should be looking at real innovation that can actually have an impact today. And I think this is probably one of the best technologies I've seen, and it seems like it's actually now coming to fruition. So like I said, and if that does happen, I think that could be a game changer for getting the cost down in this industry.
Well, thank you very much for your time today, Ian. It's been a pleasure having you on the show.
Thank you for having us again.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?